Welcome to Sweet Life Beat Life. We hope this video helps.
In this video, I will explain how to use an LLC to buy real estate. An LLC offers robust asset protection, separating your personal liabilities from your business ventures. This structure safeguards your personal assets from potential lawsuits or debt related to your properties. Additionally, it can provide significant tax flexibility, allowing for various strategic deductions and income management. Understanding these foundational benefits is the first step towards smart real estate investment. First, choose a unique name for your LLC and register it with your state's Secretary of State. You will also need to appoint a registered agent who will receive legal documents on behalf of your company. Creating an operating agreement is crucial. It outlines the ownership structure, member responsibilities, and profit distribution. This essential document ensures clarity and smooth operation among all members involved in the venture. Financing an LLC purchase often involves commercial loans, as many traditional lenders prefer to work with individuals. Be prepared to provide personal guarantees, especially for your first few properties, to secure favorable terms. Some investors opt for seller financing or private money lenders, offering more flexibility for new LLCs. Having a solid business plan and a strong credit history for all members will significantly strengthen your loan applications. Maintaining meticulous records is vital for your LLC, including separate bank accounts for all property-related transactions. Adhere strictly to annual state compliance requirements, such as filing annual reports and paying necessary fees. Consult with an accountant experienced in real estate LLCs to optimize your tax strategy and ensure proper reporting. This diligent management protects your liability shield and maximizes your financial advantages over time.
Thanks for watching. Consider subscribing if we helped you.